Okay, peeps, welcome back. Today we're going to be talking about 8 deep discounted YieldMax ETFs to buy right now. Let's get it. So the first YieldMax ETF would be TSLY. Got the charts pulled up here. As you guys can see, it's sitting at support. You can buy at $13.20 right now compared to if you had bought basically about the beginning of July, you would have been paying about $5 a share more. As you guys know, price and yield are inversely correlated, so the cheaper the price, the more income you get for the dollar spent. And number 2 would be Coney. This one has not yet paid a dividend, but we are pretty confident at this point that in October they will be paying because they haven't paid anything in September. So we actually thought it was going to pay in September, but it turns out that wasn't the case. But anyways, as you guys can see, there was this huge, massive capitulation candle here, pretty much right back into support. So Coney would be number 2. Again, you're getting roughly about a $3 discount per share here. Number 3 would be Aptly. As you guys can see, Aptly has actually broken down below support. And for the ones that are broken down below support, we're going to take a look at the underlying stock on these. So this would be number 3. You would be getting looks like about a $4 discount per share on these particular ETFs right now. So now we have OARC. As you guys can see, it has actually kind of broken down below the weekly support, but there is a bit of a caveat here. Even though it broke this trend line, it is still within this falling channel, and falling channels have a higher probability of breaking to the upside than they do breaking to the downside. And the inverse is true. The rising channel has a greater probability of breaking to the downside. So maybe expect a bounce here off 1270 all the way back up to the top at about 1660. If you compared buying this at the top of resistance over here, you're basically getting about a $7 per share discount. That's pretty huge. And especially if the dividend and the share price goes up, you're going to win big on this. Number 5 would be AMZ. As you guys can see, this thing just basically fell off a cliff. You got about, I'd say about a $2 discount here. That's pretty substantial. So basically every 10 shares you buy, you're going to get pretty much 1 share for free. So the next one here that we have is actually not FB, it's GUI or Google. As you guys can see, this thing sold pretty much right off of resistance, straight through support. So you're going to get about a $1 per share discount right now. The next one would be NVIDIA. So as we told you guys before, when NVIDIA was sitting up here at the peak, we thought that Tesla would have been a better buy. It turns out we were right, and now NVIDIA is reversing and it's back down here at support. So on NVIDIA right now, which was the highest payer last month for YieldMax, they paid about 92 cents. You're going to get a huge, huge $4 discount on this particular ETF. And the last one we're going to pick here is Enfly. We have actually picked up 12 shares of Enfly over the last week. Reason being is because this thing has just been tanking, and you know, the old saying goes, be fearful when others are greedy and greedy when others are fearful, right? So the idea here is to buy at support or on a major capitulation, or at least DCA down if you're not comfortable bulk buying, and then sell at the top or not sell and just collect indigo. So these are the 8 positions. Now let's take a look at some of the underlines here. So you got Aptly. We're going to type in Apple, AAPL. As you guys can see on the weekly, this thing basically more or less is kind of testing this previous resistance here. You can say previous resistance is roughly about 170 to 180, and that's pretty much right about where Apple's sitting. The MACD and the RSI is, they did have a death cross, but they are still in bullish territory, which means they need to be above the 50 and the 0 on the respective indicators. We're still technically in an uptrend because we have not seen a candle close below this red EMA here. So Apple overall still looks pretty bullish. I do suspect we're probably going to get a bounce off of this. It might maybe chop around, go maybe a little bit lower, and then fake out and retest to the upside. I've told you guys before that October to December is usually the most bullish time of the year, and that's pretty much right upon us. What was the other one? I think the other one was GUI or Google. Let's go back and take a look at that. So we got GUI here. Yeah, GUI is the one that got sold off. So we'll look up Google real quick. Okay, Google is overall still bullish on the charts, as you can see here. If it were to come back and retest, I would say it'd probably retest at about $120 a share. So what you could do is you could get in and then DCA down on the way down. And again, that $120 previous resistance turn support is also sitting in between the blue and the red EMAs here. Unless we get a close below the red EMA, I am not bearish on Google in the midterm. And the MACD and the RSI, even though they're having a death cross currently, is still above the break-even levels. And the other one I wanted to look at with you guys is NFLY. So NFLY basically just fell off a cliff. This is the reason that we picked up some shares of this, as we showed you guys in our trades for the week in our previous video. You can see for yourself that we did pick up some on Robinhood. So let's take a look at NFLX, which is Netflix, the underlying stock. As you guys can see here, we have had a death cross on both the weekly and the RSI. We're kind of touching that overbought territory. And now Netflix is having a bit of a retracement. But it is still above the break-even levels on the indicators. We are still testing the EMAs here. Haven't had a break below, so that still indicates that the bullish trend is intact. As you guys can see here, the previous macro resistance has turned into support. We are expecting, since this thing is creating higher lows and higher highs, that's a bullish trend. We are expecting this to kind of bounce off of this area and head probably towards, I would say, at least 480 a share. So pretty much somewhere between 370 to 400 all the way up to maybe 480 a share, and then eventually back up to that $690 level. So we're sitting on support, we're sitting on the EMAs. You got your next support level here and the macro uptrend trend line here, which, as you guys can see over history, since basically 2012, this thing has held true for more than a decade at this point. So we are bullish in the immediate short term on this. So there's one other metric I actually wanted to show you guys that I have not showed you until the previous video, and that is the S&P stocks that are above the 50-day moving average. So basically what this is, what we're looking at here is kind of what we're looking for is a potential reversal signal. So whenever the S5FI gets down to the support level, we suspect that the market's going to reverse and start moving to the upside, okay? And whenever it's up here, it's at resistance, basically meaning almost all of the stocks in the S&P are above their 50-day averages. At that point, we expect the markets to start selling off. And as you can see on July 23rd, that's pretty much what happened. If we go over to the SPX, you guys can see almost exactly that we started selling off from that point. So there is some correlation here. So pretty much, I would say maybe within the next week or two, we'll start getting that bounce to the upside. So there's one other thing I wanted to mention. As I told you guys before, September is the most bearish time frame of the year. We are in the most bearish weeks of the year, which is the back half of September. And typically speaking, either from the beginning of October to the end of December or to the middle of October to the end of December is the most bullish time frame of the year. So we are expecting that these dip buying opportunities are coming to a close, and a lot of these positions will start reversing back to the upside next month through December. Why is that? Well, it's because you got holidays over the next 3 months. Everybody's going to be spending it, for Halloween, Thanksgiving, Christmas. People got kids, they want to go trick or treating, or they want to get their family gifts and have a big turkey dinner and stuff like that. So when you think about these things from a psychological perspective, when looking at the markets, you'll understand why the end of the year is usually so bullish. So anyways, these are the 8 deep discounted YieldMax ETFs to buy right now. If the price goes up, You guys may have to buy at higher prices, but then again, nothing's ever guaranteed in markets. Prices go up, prices go down. That's the way it works. So, anyways, hope you all enjoyed this video. Please like, comment, and subscribe. I'll see y'all later. Peace.